Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn, and Kansas City wheat. Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these my charts. This was all my own original work, as I think you deserve to have that. So with that, Chicago wheat. Okay, so there continues to be quite a lot going on here over what is now quite a time, and it can lead to a confusing picture, as you can see. So let me explain. In one of the earlier features here, we had been a multiple and contradictory head and shoulders patterns and reverse head and shoulders patterns between March and July. However, until changeover in September, the dominant pattern here had been the fairly obvious bright red mid-February to mid-June bearish Andrews pitchfork. Even now, the broken red upper tine of this pattern, which is currently at 511.5, though broken, is still showing the bearish angle of attack, with the market sliding down the top of the tine. Now, as I said 4 weeks ago, I don't normally like doing this, but I also drew then the shallower bearish dark blue shift pitchfork for the same move as the bearish Andrews one. This pitchfork gives a better idea of the medium to longer term bearish angle of attack of the market, with the market today at the dark blue middle tine, which is currently at 518.75. I also wish to address the circled crossover of the bright red upper tine and the dark blue middle tine. Now that happened on the 2nd of October. I'd previously said, and I quote, that we might see, and I quote, one or more of the following: a change in trend, a reinforcement of a trend, volatility, end of quote. Well, this crossover had been somewhat of a disappointment, as all we saw was a continuation of the trend lower. No major dramas, I'm afraid. We next have the purple neckline extension of the February to April 2024 reverse head and shoulders bottom. It's currently at 523, running just above the market. The more I look at this, the more I consider it just a nuisance interfering with the market, but still showing the bearish angle of attack. Finally, we have a small unhighlighted bear channel since changeover in September, and that's currently 505 to 523. I've chosen for now not to highlight, not because it is suspect. It is actually quite a good bear channel. But if I did highlight it, it would make this daily chart even more confusing and busy than it already is. This bear channel is the immediate bearish pressure on the market. So looking to the downside, well, we have the May low down at 506.25, which seems reasonable support, before we start reach some historical supports between 495 to 500. And then there's the big bright green 2016 to date uptrend, currently at 529. Meanwhile, looking topside, I'd suggest just keeping an eye on the tines, purple neckline extension and the moving averages. Just keep an eye on those. Chicago corn. The main pattern here continues to be, surprisingly, and also just about, the now broken dark blue February to April bearish shift pitchfork. In mid-September, with changeover, the market exited out above the dark blue upper tine, which is currently at 425, but then proceeded to form a new bear channel, currently at 425 to 534.25, until we started to see prices push up over the upper bear channel line and exploit that move higher, which happened on Friday. We're also awfully close to making this week into a weekly key reversal as well, something that should be noted. And if it was going to be one, it was going to be a weekly key reversal up, but it's not happened. It came very close, but it didn't happen. We now have to look immediately at the November 2020 high at 439.5 above the market, and the lesser Fibonacci near it, the Fibonacci line near it, which is at 439 5/8. And that's followed then by the overhead gold flatlining long moving average, currently at 447 3/4, which did an excellent job in capping prices in late September. And I'd also keep a very, very close eye on that one, because that I think is probably the more significant above the market. And then after that, the 50% Fibonacci line for 2025 up at 454 3/4. All this movement higher does raise the question as to whether the action since early August, especially noting the fall since changeover, whether this all is a possible bullish halfway hesitation. Now, I'm going to ponder on that one a little bit more. Kansas City wheat. The major pattern here continues to be just about the dark blue February to March bearish shift pitchfork. A few months ago, it was not a great looking pattern, having had both the lower tine, which is currently 429 3/4, and the upper tine, currently at 524 3/4, pierced but not broken. Thus, both tines continue to play a role, a more significant role in these days after the changeover gap we had in September, up through the upper tine, but with only one single close over it, much as it did back in June. This pitchfork is still the most significant pattern on this market. Now, since changeover, we have filled in the gap, on the gap upwards, doing so with a new unhighlighted mid-September to date bear channel, and that's currently 493 to 513 3/4. There's also another, not quite dead, but also not quite alive pattern out there that, since I pointed it out in May, has been keen on the downside action. It is the breached, though not broken, purple highlighted expanding wedge pattern, currently 492 to 594.5. Now, this pattern started out as a double top pattern, Adam and Eve type, from the middle of May through to the middle of June. It then morphed into what was initially a small, though nowadays it is quite large, breached but repaired and today still operational, purple expanding wedge pattern. Most recent action has been concentrated around the lower trend line of this pattern, and in some ways I'm minded to retire it, but that purple lower trend line still has a role to play. Thus, looking at this week, and we made a new low for 2025, lower than the one in May and the lowest low since September 2020, and in the process piercing, though not stabilizing as yet, below the significant bright red unreconstructed December 1999, yes, a lost century uptrend, if only just. December 1999 to date uptrend, currently at 507.5. Looking below, well, apart from the two trend lines and the dark blue middle tone, we really don't have that much support now until the 2003 to date uptrend, which is currently at 455. Once we really do push below $5, if that is what the market chooses to do, there's really not much below $5. There is the September 2020 low at 466, but I somehow doubt if that will really do much. Yet there is still one thing I wish you to remember, and it's something I spoke about 4 weeks ago, and I quote, "The thing to now remember is that there is no fallback pattern should the dark blue bearish shift pitchfork give way. That is a risk on the upside. At the same time, below the August 2024 low, we don't have that much support until we come back down to the levels before the gapping move higher and the ancient unreconstructed December 1999 to date uptrend. And that is the risk on the downside. And for now, it seems to be the greater risk." End of quote. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.